Corporate finance practice problem using Excel. Convertible bonds and call feature. Get ready. It's time to take our chance with corporate finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet and would like to follow along, note that we're in the practice tab as opposed to the example tab. The example tab, in essence, being an answer key. Information on the left-hand side, populating that information into the blue area on the right-hand side. We're looking at our convertible bonds again, but this time having a call option related to it. So the fact that they are convertible means that the bonds can be converted, if the investor so chooses, into some quantity of common stock. The call option meaning that the corporation can then call back at a set amount. So we have the convertible bonds outstanding. They're callable at the $1,040. The conversion ratio, meaning the number of common shares that the stock can be converted into, is 25. The market price of the stock is going to be 45. So let's calculate the conversion value and then imagine a situation where the company is declaring that they're going to call back at the 1,040. If that's the case, and you're talking about convertible bonds, which can be converted, then you would presume what would happen is people would calculate the conversion value at that point in time, determine if it is greater than the callable amount, and if it is, convert them to the common shares so they can pick up the common shares at that point instead of having it be callable at the 1,040. So it would look something like this. We'd say, okay, let's calculate the conversion value. What would the value be if we exercise the conversion option? We'd say, okay, the conversion ratio is going to be 25 shares, and the market price then of the shares, if we were to convert them, is at 45. So let's go ahead and put an underline here, font group and underline. That means our conversion value would then be the 25 shares that we would then have after the conversion times the $45 per share would be the 1,125. Because that 125 is over the callable option, if the company was declaring that they're going to call them, then at the 1,040, that means we would get 1,040 if they were to call them back as a bond. Then we'd probably say, no, we want to convert them to the stocks, given the fact that the stock value is greater than the call amount. And so that's what would most likely take place. So because the conversion value is over the call price, bondholders would convert if the bonds were to be called. That'd be the general idea with those two kind of things, just adding more complexity to the type of security. Remember the basic kind of components of the security being that we've got the bonds, we've got the stocks, now we got this bond with the convertible option. So now you got to think about it from the standpoint of the stocks and from the standpoint of it being a bond, and then just adding one more kind of component to complex the security a little bit more, it being callable at a set amount here.